Hello traders, you are welcome to my channel once again. As we do, this is a pre-market analysis for the week ahead. All right, if you are new to my channel, please do well to subscribe. All right, hit the like button, activate the bell sign so that anytime I drop a new video, you will be the first to be notified. All right, before you start your analysis, we have what you call Forest Factory, where we see our economic calendar, the news for the week ahead. So do well to go through it so that you know what you are expecting as far as the news is concerned. All right. Having done that, we move straight to our chart. When you want to start your analysis, you do what you call top-down analysis. You start from the higher time frame, all right, down to uh, your lower time frame where you do execute your trade. So without wasting much time, uh, how I do trade, because I am a day trader, meaning that any trade that I place, I will have to close my trade before the day runs out. So if you're a swing trader, it's all right. That means you hold your trade for like 2 days, 1 week, just like that. But as a day trader, you place your trade, you close your trade before the close of business for the day. So without wasting much time, then we start our analysis from the daily time frame. All right. You open your daily time frame, you expand it so that you can see every details. It's very, very important. You expand it so that you can pay attention to every little details as price action moves. All right. Please, if you see anything like a short form BOB, that is bullish on that block or a bearish on that block. Before you do anything, please, you should know that market structure plays a very significant role. For you to be able to do your analysis very well, you should be able to read market structure. You know that market structure is the overall framework of what price action is printing. All right, as a trader, every candlestick counts because you need to be able to know the anatomy behind each candlestick. And apart from that, when you want to do your analysis, you mark your break of structure. All right. Before a break of structure will happen, there will be a pullback. Then the first high, which is this, then price action will go and take out this high. Then when it takes out the high, the swing high, we say there's a break of structure. All right. Any down leg that breaks a structure is being regarded as a strong low. All right, this is a daily chart. I have my structure marked out already. Okay, and this is the leg that we are playing. This is the daily leg that we are playing. All right, here we have this is a strong low. All right, this is a strong low. Why is it a strong low? Because it breaks this structure to the upside. I hope that is clear. It's a strong low. It's been classified as a strong low. All right, daily strong low because why? It broke this structure to the upside. It created another high. Any structure that fails to create another high is being regarded as a weak high. All right, meaning that price action will come back and take it off because it's a weak high. All right, now when you open this daily chart, you won't be able to see much information if you are not that experienced. That is why we scale down to further seal details. Remember, daily time frame only prints just one candle. If it is a 4 hour time frame, it prints so many candles, not one, many candles. So each candle represent information that anything that happens within the time frame there. So we need to scale down to 4 hours so that we can see this thing very clearly. All right. Now that we have expanded our chart, we can now see everything clear. All right. For the whole structure swing, you see that this is the origin. Everything happened between here up to this point. All right. But this is far, so we need to deal with this current leg. This current leg is what we'll be dealing with now. All right, that is how to analyze chart. This current leg is what we'll be dealing with now. All right, so price pullback to this level. All right, this 4 hour pullback. All right, to this level, we classify it as a strong low. All right, why is it a strong low? Because it broke this structure high. You can see. Remember, just a weak break is significant. Even if it's a body break, it's also significant. So don't lose out on some information. It's very, very critical. Now that this daily leg has created a high, all right, and it broke this structure, this is being regarded as a strong low, all right? Meaning that this point is where financial institutions, big boys, big players in the market, this is where they lock in their orders, all right? It will be very, very difficult for price action to come back and take out this low. So let's have that at the back of our mind. So the last bearish candle here is being regarded as bearish underblock. All right, a bearish underblock is the last candle, all right, before a bullish trend will continue. Remember, we have a bearish underblock and we have a bullish underblock. Bullish underblock simply means the last bullish candle, and the bearish underblock simply means the last bearish candle, all right, before the bullish trend happen. So you flip it. Now, the last bullish candle before the bearish trend happens is what we call bearish underblock. So now that this low has created a high, this low is regarded as a strong low. Now, when price got to this place, it had a pullback after it created this high. All right, it pulled back. After pulling back, this is a 4 hours pullback. After it pulled back to this level, all right, it stopped shy. It did not come down to take out this strong low, meaning that this high has failed to do its job. So it's a weak high. All right. Any moment from now, price will come down, come back to this point and take it off. All right. Now that we see that this daily push did not also take out this high. All right. This daily push did not also take out this high. It created another high, but it did not take out the previous high. All right. Now let's have that in mind. When the bearish trend starts, see what happened. It just weak this high, this daily push, this 4 hour weak out this daily push. All right. Now you see price coming down and it has ended here before the market close. If you if you know how to draw your trend lines from this swing to this, from this point to this point, you discover that price action has already body breaks this daily push. All right, what does that tell us? That is telling us that price action will take out this point, is coming down to tap into this daily imbalance here. There are daily imbalance here. This very place where I mark this dollar sign SLQ is our liquidity point. And also because some traders has locked in some orders under this place, there are still liquidity. So price action will use this place and this place as a liquidity before it taps into this uh, strong low before price will reverse back. What am I saying? Price is here right now. It will take out all these guys that are here. All right. It does because this serves as a liquidity for the market to flow. And as soon as price gets to this place, there's also a liquidity here because of all these imbalances here to be filled before price will tap into this strong low. All right, it will interact with this uh, bearish on that block. All right, this bearish on that block, then price will revert from here and take out this weak high, this weak high. So it price will have to reverse from here, go up and create another high. All right, but we know that we don't control the market, so we should be mindful of that. Having given you my analysis at this point, if you want to further uh, uh, put in another confirmation, you bring out your Fibonacci retracement tool, take it from this strong low because all the whole move started or originated from this level, this strong low. All right, take your Fibonacci retracement tool, plot the 100% to 0%, put it from this down to this high, and where is this uh, uh, your entry? Where is it seated? You see from this 79.0, you see exactly this is where uh, your bearish on that block, your bullish on that, and your bearish on that block, this is where it's sitting. And if you look from this place, anything from 50% down to 100% is what we call a discount area. So this is a discount area. Where price is now, price has already interacted, it has already tapped into our discount area. All right. But if price holds here, if this holds, because sometimes, like I said, we don't control the market, all right? Just keep an eye here. Should this place, this support level, because it's a support level, because price pull back to this level, and this is where we experience this daily push to the upside. But when the daily pull, the daily moves uh, happened, it did not take out this high, which is unusual. So for a bullish trend to continue, this high has to go. But since this high did not go and this daily push stopped shy here, and a bearish movement occurred from here that took out this high, this daily high here, you now see that price is coming down to this level. All right, if it holds, that means price can turn from here. Price can turn from here. All right, just hold on. Price can turn from here, go back, then move again like that before it finally comes down to tap into this level where the price started from. This is the origin, all right, of this move. So we don't control the market. Put your eye, put an eye on this level. But what I am seeing, based on my experience, price has already body breaks this daily push. All right, meaning that anything under this place will be taken as a liquidity for price action to facilitate price action to get to this level before it will reverse and head straight up. So as soon as price reverses, it's going to create another high. And before for price to create another high, it has to take out this weak high. All right. So and if you scale down to 15 minutes where we normally take our um, execution, all right, time frame where we normally take our execution, if you look at it very critically, all right, you will discover that this point here, this very point here is exactly where price has gotten to. And if you look at this place, it's a liquidity grab. This movement will take this place as a liquidity grab and come to this level, take this place as a liquidity grab, because that time this movement occurred, there are still traders that are still holding their trades, believing that price will go further up based on their analysis. They are not wrong because we are on a bullish trend. All right. So there are so many liquidity here. There is liquidity here. There is liquidity here. This move here is a minor structure move. All right. You see a push to the upside, then a retracement. And this overall move, when you look at it very critically, you discover that at the end of the day, price will come to this level. Price will come to this level. If it holds, it can go back from here. Price can turn from here. But all things being equal, I want you guys to put an eye at this level, all right, because it's also a support level. It's a valid support level. Why? Because price has touched this place once, he has touched this place the second time and he bounced, and this is the third time that price is coming to this level. For a support level to be valid and very strong, that means price in the past must have reacted to that level more than once. And as we can see, this is the third time. This is the first one, the second one, this is the third one that price is pulling back to retest this level. If it holds, that means price will turn from here. Once you start seeing a rejection here, but another thing to further buttress my analysis, once you plot your uh, trend line, you will discover that this trend line is no longer valid. Why? Because it's already broken. All right. You see, instead of if you look at this candle very well, you discover that it made an attempt to push up. All right. It made an attempt to push up, but it fails, and price reacted this way and is still pushing backward. So what does that imply? That means that this trend line is no longer valid as far as I am concerned, based off of my experience. That once trend line is broken, is no longer valid. All right, now we are expecting this price action to pull back to tap into this origin where the whole move originated from. And once price action gets to this point, you will see a very swift move to the upside that will now come and take out this high. So, guys, I want you guys to enjoy this analysis, put it to work, test it, and drop your comment at the comment section at the end of the day. and tell me how it plays out. If you have anything to share with me, please drop it at the comment section. Thank you so much. Subscribe to my YouTube channel.